Hello everyone, this is Evan here from the Trade Risk on Friday, June 3rd with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other market sector analysis, and we're going to spend most of the time looking at some individual names and some trade ideas heading into next week. I just did a market recap, kind of market environment overview yesterday. That video went out Thursday, which is a day later than I usually do my midweek update, but because of the holidays, we were a little off schedule here. So I don't want to go too in-depth and spend too much time going over redundant information here on the market environment, but we are going to cover it because we did have a little bit of a mix-up here on Friday, some changing price action. I want to cover that, but for more detailed analysis, check out yesterday's video on the YouTube channel or traderisk.com. You'll find it there. So let's jump right into it. S&P 500 weekly time frame closed up 2 basis points. So basically flat on the week. Notice the candle here. We spent most of our time actually sort of defending support down at this 209 level. So let's take a look at the daily time frame. Remember, we covered a lot of this yesterday, so I don't want to go too in-depth looking at the same information here, but Friday did change things up a little bit. Well, really it didn't change anything structurally, but there is something to take note of with Friday's action, which was a pretty wide range day. Take a look at this bar here, and this was off the heels of the unemployment data that came out on Friday, and we did have a wide range retest of support down here at 209 after opening up north of 210, basically near the close on Thursday. So what this tells us here is that we spent 4 days testing and holding this 209 support. Remember, all week, holiday shortened week, we were down here at these 209 lows at some point in the day, and the bulls did defend it each and every time. So that is constructive. However, the multiple retests and the magnet-like action at this area down here has me a little bit less excited about this market just from a pure sort of momentum standpoint. Remember, we came into this week off of this close on last Friday. That was very constructive. Look at this nice pent-up kind of move higher. If the squeeze wanted to happen, it would have been perfect to just see us kind of keep running as we came into this week, but instead we spent the entire week just in this tight sort of range here. So all of that nice excitement momentum has kind of dissipated, and now we're more in a very range bound clear sort of resistance at 210.50, support at 209, wait and see type of market. So nothing really wrong. I'm still bullish here, but again, I think we lost some of that pent-up momentum that I was more excited about coming into this week. So just keep that in mind. I think the range here is pretty clear, 209 to 210.50, 211. If we start to break the highs from this week, then all of a sudden that momentum can return. The squeeze can kind of ensue from that point. So that's sort of my read. Again, still 8 and 20 moving averages here, very bullishly aligned, and those are the levels I'd be watching into next week. As far as the other indices go, very similar comments here. You can see IWM has a different look to it, certainly more pent up here. We didn't keep hammering on the same kind of level. It did make progress basically all week. We undercut Thursday's lows today on Friday, but we did recover off of them. You can see we're still pretty stretched away from some of these fast-moving averages. So I like the action here in the risk appetite index there. That is the Russell 2000, and then the Qs also undercut Thursday's lows, but we did get a pretty strong bounce, kind of a double bottom here on the short term, perhaps down right around 109 and a quarter, 109.50. So Qs look pretty constructive. Still below April's lows right now, but all things considered, still in a kind of a new leg uptrend that emerged basically back here on the 24th, which was last Tuesday. Now let's look at some other markets. Again, you can head back into yesterday's video if you do want a more in-depth look at the current market environment. TLT had a very explosive move here on Friday, 1.42% move with a nice gap higher above resistance. This looks good, especially on this weekly time frame now. Look at this consolidation that took place, and now we're starting starting to emerge higher. Very constructive, very nice looking pattern here. As you know, we were short it in here and we got out just in time, eking out nice little profit as we covered down here right into the 130 area. So we did avoid getting squeezed out of this short position that we were in. So far TLT looks good now for the long side. Not involved in it, but I do like the sort of move that it had here on Friday. Gold also a very nice explosive move higher, leaving behind the support. So the 4-day tight range we talked about Thursday, saying that some resolve would happen here sooner than later, is actually happening to the upside. We're getting that move higher back into the midpoint of this range. So we'll be key now to see if the bulls can continue the march higher to the top end of the range, or do we come back down here and sort of fill the gap and look more sluggish. Same thing with silver, nice explosive move off of this $15 level. That's constructive there. Also, same comments apply. Do we, continue higher next week, or do we have to come back down, fill the gap, and take the slower approach to this perhaps continued move higher? So those are the metals and TLT, which had some pretty strong action. USO, not much changed here on Friday, still just moving sideways. We're still long USO, not a big position for us, but we're still long it, waiting to see a little more of a definitive kind of reaction here. We're just going sideways. We either need to break down below 11.50 or we need to break above $12. Let's see which way that wants to lean heading into next week. UNG, we're also still long this. Nothing changed here on Friday. Really could use a rest, really could use some consolidation here. I'd welcome it as long as it stays above $7, or at least, some of these fast moving averages. This declining trend line, I think UNG looks to be heading higher, the path of least resistance anyhow. So that's sort of the read there on some of those major commodities. And then UUP, actually, let's discuss that, which is really what helped fuel this gold, silver, and some of these other commodities. On Friday was just a complete rollover here in the US dollar. Completely lost this 24.50 level. Weekly chart suddenly doesn't look so hot after we were pretty excited about getting back above 24.50. We very quickly lost it all in about 1 day. So monthly chart, you can see still at an interesting spot, still at that inflection area, all things considered. Weekly chart painting a little more of a pessimistic picture here, especially if it holds down at these levels. Again, I think 24.50, give or take 10 cents, it needs to be above there if you want to remain bullish in UUP. If it stays below here for much longer, I would not really want to be long the US dollar. Again, this pivot low down here right around $24 probably gets interesting. Maybe some type of retest there in the near future. If it stays weak, we'll have to see how that looks heading into the rest of the week, or heading into next week and throughout the month of May. Now, looking at some of the sector analysis, we covered this yesterday. The only real standouts, XLF, I want to talk about because Friday had a painful day for financials. Even though they did recover and bounce off the lows, you can see it still did come back down. If you look at the weekly chart here, you can see back to testing and bouncing off this declining trend line there. But a lot of these big names like Bank of America down 3.5%, Citigroup down 3.3%, JP Morgan a little less so, but still hurt, down almost 2%. So a lot of these banks that are tied very closely to the rates and what they're doing and what the Fed's decision is going to be on raising rates. So of course highly tied to all of that. So a little energy coming out of financials here, something to be aware of. Let's see if they recover. Let's see if they can fill these gaps and recover, or is this going to be a new weak sector, a new sort of rollover sector here that would not be good for the market as a whole. On the other hand, XLB, the materials, had a nice session for the most part here on Friday, closing up almost 1% and getting back to recent highs here. So that is constructive. Otherwise, all the other sectors, utilities had a huge bid on Friday as well. Again, tied to that whole theme of rates and what the Fed's decision is going to be heading into June and July meetings. So that's pretty much the standout changes there on Friday. Now let's get into some individual names, because this is something we did not talk about in yesterday's video. Let's start with Apple. It had a nice run here ever since it reclaimed the support level, this breakdown level of around $93. Pushed into the gap, failed at $100, and now it's pulled back 4 days in a row. And this is sort of a theme here I want to cover in a few of these big sort of technology names here. Apple, first one here, 4 days of pulling back. Google, very similar pattern here, 4 days of pulling back into the 8 and 20 right now. This is where you'd want support to hold. Also, Facebook, just kind of sluggish here after moving sideways more or less for 4 days. Also at the 20 period EMA, and Netflix, same type of pattern here, had a nice strong push higher for the past few weeks, mid-May, and now all of a sudden it's been weak for the past 4 days. Tesla, similar pattern as well. It's just going sideways. So the point is all of these have been kind of sold off or lethargic for about 4 days now. Will we see some type of pop heading into next week? If we do, you'd have to expect that that's bullish for the market. A lot of these names, Apple, Google, Netflix, Facebook, Tesla, these are high beta names. These are high capitalization names, so they have a high weighting on the indices as a general whole there. So if those names all see a bid come in, if we see some kind of ramp higher, that's very constructive for markets. So let's see if they do roll over from all of these sort of upper level respective support points, or do we get the pushback higher to those recent highs that we saw in mid-May. That's going to be a very key thing to keep on your radar heading into next week. Now, Amazon, a little bit of a standalone. This is just heading higher, marching higher. It's down a little bit on Friday, but still trading at all-time highs. Amazon looks really good. So keep that in mind. Twitter also, keep this one on your radar. This one's looking pretty constructive recently, especially since this nice breakout bar on Friday. Really, this reversal though, last Tuesday set up this entire move. We were lucky enough to catch a nice piece of that. We're out of Twitter now, but we did catch in on this reversal point, sold out in here as it approached $15. But it is still holding firm up here. You can see the 820 starting to cross up into bullish alignment. That's constructive if you can get above 1530, 1540 back into this gap and cover this gap. You might have a nice little trade in there next week, so keep an eye on Twitter as well. So that's sort of how I'm looking at the high beta names. They're at all interesting spots at short-term support. Let's see what they do next week. Now, getting into some individual names, PayPal, here's one weekly chart, not ready yet. I just want to point it out. It is hanging out, kind of basing, getting really tight in this range. It's at an important support level that is trying to hold this 37.50 level. If it can hold here, maybe you can get back into the top end of this range. $40 is your breakout level. Nice bigger base here all the way from 30 to 40, and then you have this sort of tighter range happening right underneath this major resistance level. So it's something worth watching. For those of you on our newsletter, we've talked about PayPal a couple of times in the past as it ran up here. So let's just keep it on watch. $40, not ready yet, but something to consider. HON, Honeywell here, getting nice and tight at all-time highs. Notice here, I like the big breakout that happened basically in March. So this move higher in March out of this bigger consolidation pattern, and now it's basing higher yet again with this tighter, kind of smaller continuation looking pattern. I really like the setups when you have this small base right above this big base. This gives you a nice little kind of second entry. If you miss this, then you can probably get involved as it starts to clear these recent highs above 115. That's something you want to keep on your radar. TRIP had discussed this in the stream a couple of days ago. Look at this nice tight pattern here for multiple months now, going all the way back to February. It's been real tight in here, and it looks like it wants to get going. We still haven't seen the real energy kind of breakout bar enthusiasm that we really like to see. We're still waiting on that. So let's see if it gets above 68.75. Perhaps we get that excitement in here for Trip to get us a nice trade to the upside. Next is RTN. Raytheon, this is a name that we're in. This was the pattern, the breakout play that we played back here on this weekly bar. So we've been in this for several weeks now, a little over a month, and it made a nice kind of continuation move higher here. I don't necessarily recommend perhaps chasing this move, but it's something that's in play. It's going to bid on any further weakness or a dip or a pullback, something you may want to consider getting in as it trades at all-time highs. RTN, I like it. We're long it. Yelp, here's one that we talked about. It broke out of this kind of pattern here. Another name that doesn't have a ton of enthusiasm behind it. Notice how much overlap there is in all of these candles as it kind of stair steps higher. We generally like to trade things with a lot more cleaner kind of momentum, pent-up urgency, but we still got to respect the pattern. It is still trending higher. Weekly time frame, you can see it is basing and it is holding high and tight after this nice kind of breakout bar here back in the beginning of May. So I do like Yelp structurally here. Let's just keep an eye on it. Maybe it presents a nice opportunity for us. Weight Watchers, this is another one that we've been talking about a little earlier this week. 1550 or so has been resistance all this year, hasn't been able to clear back above it, and it did try to this week, and you can see it did pull off those highs here. So keep an eye on it. It looks pretty actionable now. I like the failure here actually at 1550 again, because it does kind of reinforce that there is a significant level and significant amount of supply at 1550. Therefore, if it can clear it, that would be a nice kind of all clear green signal to perhaps get long this. So keep WTW on your watch list. And finally, HTZ, we discussed this one as well. Still very beaten up here for the year, down 20% or north of it. But it is trying to sort of carve out some type of bottoming formation here. You can see it did break this trend line, and ever since it's been kind of levitating higher. So it's above the 8 and 20 on the daily chart. Longer time frame still looks like a disaster, but you might find some opportunity here in HTZ, depending on your trading style. It looks to be something that can move pretty quickly, so might be worth watching for you. And that's what I have for today. So I hope you enjoyed the video. If you're not subscribed to our YouTube channel, you can do that bottom right hand corner. I encourage you to stay up to date with all the videos that we do. As always, thank you guys for watching. Have a great weekend, and I'll catch you guys next time.